Peak Wealth Management proudly presents the Trust the Plan podcast with Nick Hopwood and Jim Pilat, where we believe by providing education and guidance, we can help you retire with peak confidence. Now, here are your certified financial planners, Nick and Jim.
Welcome everyone to the Trust the Plan podcast. I'm Nick.
And I'm Jim.
Jim, it is 1999 all over again.
Oh man,
We're seeing the animal spirits. This is a Twitter post. This is not financial advice. These are not recommendations. So don't buy the stuff, okay? So I've gone down all the rabbit holes on Twitter, okay? I do this for you, so you don't have to.
You do the research.
Yep. So over the past year or so, actually it was in 22, these specific ETFs have been approved by the SEC. So they've been slow to roll out, but now they're really gaining in popularity. Because who wouldn't want to invest $141,000 and earn $100,000 per year in dividends? We say dividends.
Yeah, it sounds good.
If you're listening on the podcast, air quote dividends. Okay, these are not dividends. I guess we might call it passive income, as it says, but it's not a dividend because it's just a return of capital. Mm-hmm. That means they're giving your money back to you. So if you were to follow this guy's post. Every day, we've branded it. The every day is payday times 2 portfolio. So you get 2 distributions each day. And they all pay on different days. So who wouldn't want to pick their investment based on which day of the week the dividend pays? Right?
Yeah, there you go.
Sounds like fun.
For sure.
You just sit there waiting for the checks to come in.
Yeah, every Friday, get a double payday. And
on Friday?
Enjoy the weekend.
You're getting WMAX and ULTY. Why not? Our average yield as of last month when I took the screenshot is 71%.
Ooh.
What could go wrong?
Nothing, probably.
So, like I said, this was done a month ago. I happened to look up these tickers and looked at the last month performance. Every one of these is down like 20% over the last month because the underlying stocks that they're tracking, they're the high volatility names. They were going on a tear this summer. Now the market's reversed, and these, what do we want to say? I'll just say crappy high volatility stocks that are just like, they're not meme stocks, but they're like, they just fall in and out of favor, okay? There's no justification seeing a particular stock going up so much at certain times. So the ETF is based on those popular stocks, and then they use leverage, okay? And then they're paying out every week some of the capital. And so I think it's really silly. But when things like this start to gain in popularity, it's kind of like the meme stocks gain in popularity. Well, that just means there's extra liquidity going around. For some reason, and usually it comes back to the Fed, okay? There's extra money sloshing around, and it's finding its way into these holes. And these things are super volatile. I've read all of the posts. Everyone's committed to these. They understand that the price can go down, but they're like, but look at the yield. Well, yeah, the yield is there, but they're giving your money back to you. So I'm very skeptical on these. So I think that you should stay clear.
Yeah, anytime, just like anything, anytime there's some kind of get rich quick or sounds too good to be true, there's usually a reason why. And I think this falls into that category.
Absolutely. It's pretty hard to even understand because you take a stock, you add leverage, and then you're paying out distributions every week. Like, it's just a gimmicky, right?
Yeah.
And every day is payday times 2, super gimmicky.
Yeah, I mean, you're really banking on it continuing to go up in value or continuing or at least not going down in value.
Yeah, you'd be happy if it just stayed level, right? Because you have these distributions. But that is going to depend on the underlying stocks always going up. So what happens when they're flat? What happens when they go down? Well, now, you're when they pay distributions, the price on the funds go down because they're paying out a distribution, and the underlying is going down. So the NAV is getting eroded. It's a new thing. It's gimmicky. I want you to watch out for it. Okay.
Yeah. Yep. I think that makes sense. When you start seeing it pop up on Twitter and sounds too good to be true, let's be skeptical.
Yeah. So that's our public service announcement for the day. If you are in this stuff or if you're thinking about and you want to have a conversation, I'm happy to do it. You can reach out to us at peakwm.com.
Peak Wealth Management thanks you for watching and listening to the Trust the Plan podcast, featuring certified financial planners Nick Hopwood and Jim Pilat. If you enjoyed our program, please subscribe and share. If you'd like to learn more about our services, please visit peakwm.com. peakwm.com today. See you next week.